Assuming the underwriter has found the file to be in order, they will then turn it over to the document preparation department. They will prepare various loan documents such as the promissory note and deed of trust, and a whole slew of disclosure and disclaimer documents. Some of these are government mandated and others come from the lender themselves. Once the lender's docs are prepared, they send them to the escrow company, which then prepares any additional documents that are needed to close the loan. The lender's documents have a relatively short expiration period on them, so escrow closing needs to move forward in a timely manner. Before your purchase transaction can actually close, the CFPB, or Consumer Financial Protection Bureau, requires that your lender must deliver the closing disclosure to you at least 3 business days prior to the date of closing of the transaction. As an example, if closing is scheduled for Thursday, then the closing disclosure must be delivered to you on Monday. If changes to your loan occur between the time the closing disclosure form is given and the closing, you must be provided a new form. When that happens, you must be given an additional 3 business days to review that form before closing. Changes that require lenders to provide a new closing disclosure and an additional 3 business day waiting period after receipt include changes to the APR, or actual percentage rate of the loan, above 1/8% for most loans, and 1/4% for loans with irregular payments or periods, change of the loan product, and addition of a prepayment penalty to the loan. You are now in the escrow office signing documents. If you have to bring funds in to close, it will need to be in the form of a wire transfer or a certified bank check. You will not be signing in the same room as the seller, and typically not at the same time either. As the buyer, if you have obtained a loan to purchase the home, there will be a lot of papers to sign. Just know that the vast majority of them are boilerplate to loans and closings in general, and you cannot typically modify them. Basically, if you want the house, you will be signing those documents. Certain documents, however, will need close scrutiny. One is the note itself. This is the document that states what you owe and what the interest rate is. Make sure that the rate is what you were expecting. If it's not, don't sign it. Have the escrow officer contact the lender immediately to discuss the issue. If in fact there was an error, and depending on the lender, sometimes they can send corrected docs over while you are still there. Most of the time, however, it will require a return trip. This doesn't mean that you can't go through and sign the documents that are fine and won't change because of the error. The other thing you want to be certain of is the legal description. Make sure you are buying the property you thought you were buying. This may sound like overkill, but I have been on more than one closing where the legal description was not correct, and a sale would have occurred on a neighboring property. Make sure that your names are correct on the actual deed to the property. As opposed to purchasing a car where the title is held by the lien holder until paid off, the deed or title to the property is actually transferred to you at closing. There is a lien against the property in the amount of the loan. You want to make sure your names are correct. You've now signed closing documents, but the house is still not yours yet. Escrow will send the signed closing documents back to the underwriter for review. If they are satisfied that everything was signed and signed correctly, even down to the color of the ink, they will approve the closing for recording. The escrow department will then take various documents from the closing down to the auditor's office for recording. From the time you sign until the time the sale is recorded usually only takes 1 day. On rare occasion, depending on how early you sign, and if the underwriter and lender are local, it could happen that same day. On the other hand, depending on the lender involved, the day of the week you signed, holidays, etc., it could take longer. You don't own the home until the transfer has been recorded. It's recorded. It's yours. Congratulations. You're a homeowner. More often than not, you can now take possession of the home at 9 p.m. on the day the sale was recorded. Unless that was modified, 9 p.m. of whatever day was negotiated for possession is the time of day. This gives the seller all day to move out now that it's closed. Sometimes it was negotiated for the seller to stay in longer after closing to move out. If that's the case, a rental agreement should be prepared, as you are now the owner and they are the tenant. You also need to let your insurance company know that's the case to make sure you are covered. In addition, the tenant should now be paying rent, unless it was negotiated otherwise. Your loan interest is now accruing, and you should be compensated accordingly. Thank you so much for the time you spent on this tutorial. I hope you found it of benefit and that you can move forward towards buying a home with the confidence that you now know a lot more about the process than you did before. We would love to represent you, so if you don't have a buyer broker yet, please call us so we can get started with Phase 2 and your initial needs analysis.